many sights to see.
Hello, traders. Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Monday, approximately 9 o'clock here in Honolulu, Hawaii, May 10th, and this is the Daily Report. Forex Gold is currently trading at $1,200 to $1,201 an ounce. But that's not the story. The story is the wild roller coaster we've witnessed overseas overnight in the Forex Gold market. The fundamental news that's out there that is changing day by day. In today's reports, I'll talk to you about my recommendations for the next couple of days. I will also talk to you about my long-term outlook, all here on the Daily Report. As I said, Forex Gold is currently trading roughly around 1201. The big story is the round of profit taking that happened last night. What we saw was a huge amount of profit taking, some selling pressure coming in the market, but on the close of the trading session in New York, it was well off the session lows. You had buying the dip bargain hunting mentality, which had surfaced, and COMEX Gold, for example, closed down 960 at 1200.80. I want to pay a particular attention to this candlestick that we're looking at here. We have had a couple of days in which we had this small-bodied star with a long tail on both ends, and today we are currently forming what is called a doji. Now, let me spend a couple of minutes to differentiate the difference between a doji and a small-bodied candle. A doji, by definition, is where the open and close are equal or 1 or 2, 3 ticks apart. In other words, it's a very narrow body. Now, when a doji has a very small tail, meaning the wicks from open to close, it's completely a different indicator than if it has these extreme tails such as we're witnessing here. Because when you have a long-legged doji, as we see here, in which the low is down here, the high is up here, and the open close are here, the story is that it opens and closes very close together, but the bigger story is that as the market came down and made these lows on profit taking, the sellers were able to push the market back up in a fever, so to speak, to where it would close near that open. And that's why it is so similar to a hammer or a shooting star. If you notice here, I'm going to look at another bottom that we had in which we had a doji and an inverted hammer. The doji has got a smaller body than, of course, this inverted hammer. The key with an inverted hammer or a shooting star, they're the same candlestick, it's just where it's found in the market, is the fact that this body is very close to the bottom of the range, and typically you want very little tail on the bottom to no tail. Now, in terms of the fundamental news that pushed the market in this direction, what we saw was gold prices fell in reaction to the European Union bailout package, as they said that there was a recovery package in place. All the member states were online. The Chancellor of Germany came out and said we're gonna protect the euro dollar. But the pullback appears to be nothing but a bump in the road to the bulls that are out there. The bullish sentiment right now is so strong that even when they take this market significantly lower, we took it down, I believe, to 1185 in the evening session, it manages to rally back up. Now, typically, during the evening session, what we did witness was this candle, which had turned black, and then thereby forming a three-river star formation. That's a very bearish reversal indicator. Followed by a confirming candle, which would look something like this. That's an all out and out sell signal. However, we did not get that. What we did get was this significant rally back to the upside. I think what will best illustrate this type of a rally is we typically look at a daily chart, and this is that long-legged doji that we're looking at. I'm going to change our time frame to 1 hour candlestick. So what we're looking at now, each candlestick represents 1 hour. And what you're going to see is this. This is when the market came down. This is that low that it hit at 1184, and this is that straight rally back up. So as you can see, it was trading in this area. It came down hard and fast. It formed a low. New buying came in. This one pattern here is a piercing line and moved back up, currently sitting at about 1201, 1202. So traders, what are my recommendations? Well, we're in uncharted territory in the euro dollar here. We've got a significant double top, which I think is going to get breached over the next couple of days in the U.S. dollar gold spread. I am recommending we reposition ourselves on the long side, both in the euro dollar gold spread as well as the U.S. dollar gold spread. We currently have a significant rally going on across the board in gold as gold begins to trade higher, 1202, and on the euro dollar 140.75. Right before the broadcast, I bought on a demo account, of course, 250 ounces of the following gold products, spread against the dollar, the euro dollar, the Aussie dollar, the Swiss franc, and the British pound. As you can see, the ones that seem to be performing the best right now are absolutely the euro dollar. That's up around $500, $600, and the Swiss franc, as well as U.S. gold. So my recommendation today is to go long with positions in both. In other words, split them up between U.S. dollar gold and euro dollar. Stops are actually going to have to make sense in this area. The only way we're going to be able to do that is to place it below the lows that we've seen in the trading session itself. So in terms of our stop in the U.S. dollar gold spread, 1184 was the low. We're going to put it at 1180. That's 1180 on a protective stop. As far as the euro dollar gold spread, the low was 907 and change. Our stop recommendation is 905 on a protective stop. So again, my recommendation is to enter the market from the long side. You see that we have placed our stops at 905 on the euro dollar, 1180 on the U.S. gold spread against the U.S. dollar. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. Wishing you, as always, good trading. Bye-bye.